Good day, I'm Chartered, your accounting tutor. In today's class, we are still on control account under financial accounting. But the emphasis here is principles of preparing control account. Accounting is not meant to be crammed. Don't need to cram accounting. All you need to know is understand the principle behind solving any question or behind posting transaction into the account. What are the principles guiding control account? If you want to prepare a control account, what are the principles guiding particularly the sales ledger control account and the purchases ledger control account? The task today is for us to understand the salient features or principles guiding preparing control account. Let's look at the principles as I explained them one after another. If you hold the principles, you have the right to solve any question without any issue with authority, because you are solving based on principle. You are not just cramming the transaction or cramming the question for you to solve. Let's look at the principle of preparing control account, particularly the sales ledger control account and the purchases ledger control account. Let's look at principle 1. Here, principle 1 here we say, identify the items given or available to you in the control account question, or anyhow you see it, as they relate to either sales ledger control account or purchases ledger control account. First, in a given question or in any way you find control account, you know that the items, as I said, must be grouped together. So as you are trying to group them or put them together, you know that they will either relate to either purchases or sales. So if it's examination, all the items are arranged in a vertical format. So it's just for you to identify that this one relates to sales, this one relates to purchases in that order. So as you identify the items, for example, if you're talking about credit sales, you know that credit sales relate to sales. If you're talking about bad debts, you know that bad debt relate to sales. If you're talking about discount received, you know that it relate to purchases. If you're talking about return outward, you know that it relate to purchases. Return inward relate to sales. So as the items are being arranged in the vertical format or horizontal, as the case may be, your task is just to identify this one relate to this one relate to this. As you put maybe some identification, you can either say SL means the item relate to sales ledger, PL means the item relate to purchase ledger. As you identify them all, either as they are arranged or not arranged, anyhow they are, your task. The first task is for you to try to shape them or group them as they relate to either sales ledger or purchases ledger. That is principle number 1. If you do that, it means 50% or 60% of the question have been solved, because you know that this item is going to sales, this one is going to purchases ledger. It's now left for you to post it respectively. Which principle 2 is going to take care of that? Let's look at principle 2. We say that post the corresponding entry of the item identified into the control account. That is either the item is debited in the ledger account, it should be credited, or it should be credited in the control account and vice versa. Here we are saying that as you identify the items, whether they relate to sales or purchases, this is where double entry principle comes in proper. If you don't know double entry principle here, or you don't know double entry, that is where you have an issue. First, let's take for example, if you identify credit sales as related to sales ledger control account, where are you going to put? We're talking about corresponding entry here. That is, in sales account in ledger, we know that all sales are credited because their revenue are credited in accounting. Then if sales is credited, bid credit sales is credited in the ledger, the corresponding will be debited in control account. That's what we're talking about, the corresponding entry. If you know clear that credit sales is always credited in sales ledger account, the corresponding entry will be posted in control account, which is the debit side. That's what we're talking about. For example, we're talking about returns outward. Return outward relate to purchases. And in ledger, return outward is always credited. So if return outward is always credited, the corresponding will be debited in control account. If you talk about bad debt is an expenses. All expenses in accounting are debited. So if you know that bad debt, you go to ledger, is always debited, the corresponding will be credited in sales ledger control account where it will relate. This is what the principle is talking about. understand your double entry, we say post the corresponding entry. If all credit sales are credited in ledger, the corresponding will be debited in sales ledger control account. If all credit purchases are debited in ledger, the corresponding will be credited in purchases control account. If all return inward are debited in a ledger, then it means it comes to sales ledger, it will be credited. This is what the principle is talking about. So if you're able to understand the working of double entry, their position, you will now find control account very simple. And this is a fundamental key of posting control account. Because control account is a completing double entry of the item you're talking about. If you identify an item, first know its position in the ledger account, where it's supposed to be based on principle. Then the corresponding entry is what you are going to post in control account. This is the key and this is the foundation to control account and make control account easy. So take note. And that is why I say if the item is debited in each ledger account, which is its position, when it's posted to ledger, then it means your tax is just to do the corresponding entry in the control account and vice versa. So it means if you understand control account, you understand double entry, you don't have issue with control account. And that is why I told you earlier that double entry is the bedrock of financial accounting. Double entry is the bedrock of financial accounting. Because if you understand double entry, it's going to help you to understand very easy many related topics in accounting. And that is why the person that introduced accounting, which is Luca Pacioli, he introduced double entry, talking about the account that receives and the account that gives. That means you are able to understand it. You have a lot of aids in understanding financial accounting. Let's look at the next principle. This principle treats opening balances. You know that control account deal with opening balances. Balances that the business begin with, or balances that were brought from the previous year to the current year. How do you handle such balances? Because we are talking about account receivable here and account payable. Account receivable are assets. So assets always have balances brought forward or balances carried down because of going concern. So how do you handle balances of account receivables and balances of account payable? Now talking about opening balances. It is very, very important. Let's see how we handle balances in control account, particularly that of sales and let's start with sales. Opening balances in sales ledger control account. We are saying that there are conditional statement here. Mind you, the conditional statement is very, very important. We are saying if the opening balance is indicated as debit or credit balance given, post it as indicated. That is, in a given question, if an examiner says the opening balance of sale was a debit balance, it means take it to the debit side of sales control account. If the question or the examiner says that the opening balance of sales ledger is a credit balance, it means take it to the credit side of sales control account. That's what I'm talking about, the indication here. The question or the examiner will indicate clear that social balance in sales ledger was a debit balance. This one was a credit balance. So post as indicated means post them in the respective side as the examiner mentioned or as you discover it in the books. If it was a debit balance in the book, take it to the debit side of control account. If it was a credit balance, take it to the credit side as the case may be. This is the meaning of this principle. So let's look at the B aspect, where we say that if not indicated, debit or credit balance, the balance should be debited. Here we are saying that the balance here will not be indicated at all. Nobody or the examiner will tell you whether it is a credit balance or a debit balance. The balance will be given just like that. Now in that case, they will give a single balance. For example, sales ledger balance 10,000. It is not indicated whether it was a debit balance or it was a credit balance. So what do? We are saying that if the balance is not indicated by the examiner or any way you see it, it means you must take it to the debit side of sales control account. You must take it to the debit side of sales ledger control account. Why is it debited? It is debited because in accounting, if we're talking about account receivable is an asset. This is the foundation of accounting. Account receivable is an asset. And in accounting, all balances brought forward of all assets are debited. So account receivable is an asset, current assets without matter. So if there was a balance brought down or brought forward in account receivable and assets brought forward, it must be debited by principle. And that is why if not debited, if not indicated, it means anytime you take the balance of account receivable in accounting forward to the next accounting period, mind you, it must be posted in the debit side, and that is based on principle and with authority. And that God say that if the balance is not indicated, mind you, you must take it to the debit. If it's indicated, then you post as indicated, because credit balance can also be found in the account based on certain reconciliation that happen in the process of accounting period. That's why you have also debit balance in the account. But normally, the debit balance of a sales ledger, which is account receivable, must be debited. So mind you, if the balance is not indicated, given by the examiner, any question you found, please post it in the debit side by authority based on the principle that all balances brought forward of all assets are debited. You will be 100% correct. Let's go to the closing balance of sales ledger. The closing balance of sales ledger account. If the closing balance of sales ledger account is indicated as debit or credit balance is given, post in the opposite side of what is given. Very, very confusing to learn, but it is correct. If it is indicated as debit or credit, please don't treat as the opening balance. When indicated, post as no, it will not hold. In this case, if the examiner the question present to you say a sales ledger closing balance is a debit balance, please post in the opposite side. If indicated as a debit balance, take the balance and post the credit side of sales ledger. If indicated as a credit balance, take the balance and post the debit side of sales ledger. That is what we're talking about. So if the closing balance are indicated, please post in the opposite side of the position. Meaning, if it's the debit balance, post it in the credit balance as closing balance carried out. If it was indicated as a credit balance, post in the debit side of the account as closing balance. That is what we're talking about. But if not indicated, you must post it in the credit side. If not indicated, you must put the closing balance of sales ledger in the credit side. What are we talking here? It is just like the principle that says all balances brought forward of all assets are debited. So here, all balances carried down of all assets are credited. All balances carried down of all assets are credited. So if the closing balance of sales ledger, which is account receivable, is not given, it means as an asset, any asset balance carried down is credited. And that is why if the carried down balance is not indicated, don't forget that you are posting it in the credit side of sales ledger control account or account receivable control account. Let's go to the last one, which is opening balance of purchases ledger. Here, it is just the opposite, or it is just the opposite of account receivable. If you are able to understand how the opening balance of sales are treated, this is just the opposite. We are saying that the opening balance of purchase ledger control account indicated should be treated just as that of the sales. Meaning, if it's indicated as debit, post it debit. If indicated as credit, post it credit. The way you handle opening balance indicated under sales is the same way you handle purchases. Meaning, if indicated as debit balance, post it in the debit. Indicated as credit balance, post the debit. Don't change anything. Let's go to the closing balance. This is where the difference occurs. The closing balance of purchase ledger indicated GR or CR balance, post the opposite. It's the same thing here also. As the closing balance in sales ledger control account are posted based on the opposite. This is in the same way you do in that of purchases ledger. To here too, post the opposite. The question indicates clear that the closing balance of purchases ledger is a debit balance. If you post debit, you get it wrong. You must post credit. If it is a credit balance, you must change it and post debit, and you'll be 100% right. Reason being, what I want to explain here. Here we say that closing balance of purchase ledger, if not indicated, should be posted in the debit side of account receivable. Mind you, even here I wanted to say something. If it's not indicated, it means you are going to post in the debit side. Meaning what? You post in debit because, if not indicated, post in the debit because the balances brought forward of all, this is a liability. The balances brought forward of all liabilities are credited. That is a situation whereby the opening balance of purchases is not indicated. Meaning you must post it in the credit side. This is another fundamental principle in financial accounting or in accounting, whereby balances brought forward of all liabilities are credited. So if the balance is not indicated, please don't forget, in case of accounts payable, post it in the credit side with a justification that all balances brought forward of all liabilities are credited. That is in case it's not indicated. They indicated, post as indicated. Then finally, if the opening balance is not indicated, mind you, you are going to post in the debit side, just like the opposite side. If the opening balance of account payable is debited, it means is credited, it means the closing balance will be debited. So here, if not indicated, the closing balance of account payable, which is purchase ledger, should be posted in the debit side based on the principles of accounting. These are the principles guiding control account. If you're able to handle this principle with a very strong understanding, mind you, you have no issues with the two major aspects of control account, with the sales ledger and purchase ledger control account. Understanding accounting is all about principles. That's why sometimes the whole of accounting foundation is called principles of accounting, meaning if you're able to understand this fundamental principle under each topic, you don't need to go down, sit and start cramming accounting. All you need is for you to understand how the principle operates for you to solve any given question. Don't forget to like my video, share, come ask any question in case you have any issue or any topic I treated. I will say come back and look at the question and address it the way you are. My task is simple, is to make sure account is reduced to the lowest ebb so that all learners find easy in solving all accounting questions. I remain Chartered, your accounting tutor.